So we're looking at the NQ0318 contract. This could be the Dow, this could be the ES, this could be any of the indices. And I spent some time last night, it was about 11 o'clock Eastern, looking at something that stood out. And I was fascinated by it, but maybe nobody here has that same reaction. But I wanted to draw attention, maybe that's a better way to put it, draw attention to a pattern. And I haven't done this in about, I don't know, probably a week or so. So what's going on with this volatility? Volatility creates fear, fear creates mistakes, creates traps in the market, creates opportunities for the banks to get people primed to do things they wouldn't normally do. Right? Volatility is usually blamed on 100,000 other things. It's blamed on fears in the bond market, fears in inflation, fears. You hear these phrases dropped very cavalierly by these stately looking gentlemen on some trading floor somewhere. Fears in China's growth, fears in China's blah blah blah, fear, fear, fear. And you're like, wait a minute, didn't we know about that for like months? Why now? Why all of a sudden? And so in the heart of fear, in the heart of these things, I look for patterns. I look to see how things are connected. And I want to show you something I found. It might be nothing, might be something. More than half of the time, though, when I do this, it's usually something, I believe. So I want to analyze the conditions of what's happening here using three things. The first thing I have is a 120 period moving average. It's an exponential moving average, or an EMA, Echo Michael Alpha. It's an indicator everybody has on their platform. The second is the Flux Daily Cycle Markers tool, which is a predictive cyclic tool. It gives us signals out into the future. And I have all four phases of that predictive tool engaged right now. The third, of course, would be the bars, price action itself, NQ on a daily chart. Now, you'll notice that up until very recently, the phase 4 signals have produced a push effect, an advancement. Okay? So if we just look at where each of these cycles came in, you'll see that there's an inflation of price between the phase 2, the large green dot, and the phase 3, the little red dot. There's no closes below. It just goes and goes and goes. Now my dot height here, I believe, is set to 40 ticks, but here, Tim, you see a stark contrast, right? When they had a chance to go, they didn't just run the stops, they fell from Olympus, right? Or that's what they would have us believe, that this is some freak thing and nobody saw it coming. Well, let's examine what happened and approach it like a pattern. Let's approach it like a football play. A football play, many of you saw the Super Bowl, and you saw these men shouting orders to each other. The quarterback shouting orders to the offensive line, the defensive line, being told what to do. You go here, you go there, do this, do that, I'll meet you back over here. Well, look at the conditions that are involved in this play. Number one, we have the phase 1, Ernie, and the phase 2, they're up above everything. But there's a plateau effect. Okay, so let's kind of separate these two things out. The phase 1 and the phase 2, Tim, there's a plateau effect. The dots are almost in line with each other. Okay. And then over here, this green dot is just kind of to the right of the all-time high right there. You see that? So the plateau effect, green dots, things are petering out. And then, Ernie, there's a run, a Taco Bell run to the border. Goes down to the EMA. Okay, well, Michael, that seems pretty obvious. I don't know what you're trying to get at. Okay. So, what I said about doing was looking for plays, looking for times where this has happened in the past. Okay? So I'll go ahead, just kind of highlight this, because what we want to know, right? What we want to know is what happens next. How does this sequence unfold if in fact it is what? If in fact it is a sequence, is there something that we can rely on with any kind of statistical relevance to guide us towards understanding what could happen next? Again, I don't believe anything in the market happens randomly. Everything is cyclical. Everything is based on a plan, a play that's being run. Okay, you don't leave billions and trillions of dollars to chance. The 1% doesn't do that. It's not a crapshoot for them. It's an organized religion. They follow through on their daily prayers. They move these things the way it needs to be moved. So I started hunting. And history is a wonderful tool. Okay? And so here's an example of something that's similar but not quite. Okay. And I wanted to point this out to you because it's the first lesson. I wanted you to see how, Tim, you see how that plateau effect is right here? The green dot and the green dot. Okay? When all the other green dots were pushing up, that plateau effect, right? Alright, now, they made the run. It happened far later. They made the run to the border. But this pattern signaled volatility. This pattern signaled volatility. Everybody look at what followed after. Okay? There's the all-time high. And up at the time, Tim, it was around 5,000. Right? 48.75. And then I want you to see how they come up, they trip out the stops, and they drive even lower down. 4,600. So it's a 700-point swing on the Nasdaq. Okay. But this didn't happen the way it happened earlier. It happened far later. I'd like you to also take note, Tim, of where the big drop starts to occur. Ready? On the phase 4. 1, 2, there should be a big drop here. 3, 4, down. Okay, remember that. We're going to see it again. This wasn't a pure version of the pattern, but it was close. Okay. Now this one is pretty damn close. Check it out. Ernie, here's that plateau effect. In fact, let's get some color back on this. Here's the plateau effect. The phase 1, the phase 2. Tim, you see it? All-time high. They stab the top. They trip out the stops. Now look. 1, 2, drop. There's the drop, the first drop. Ernie, look at where the second drop kicks in. The phase 4. Phase 4 is a plunge point. Phase 4 is a plunge point. It's where things go to hell in a handbasket. Market goes into a consolidation phase and then drops. Tripping out the highs, tripping out the lows, and then a drop. Okay? So here's two examples of this. And you'll see that the market is in this consolidation phase 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 19, 20. 3 weeks. Practically same here. 3 weeks. Up and down and up and down and up and down. Okay, let's go back. Phase 1, phase 2. Ernie, on the other side of the brand new high. Here's the first drop, the run to the border. EMA gets touched. And over here is the phase 4. You see what happens at the phase 4? A drop back down to the low. Okay, let's keep going. Phase 1, phase 2. Tim, the phase 2 is on the right side of the brand new high. There's the plateau effect. There's the run to the border. See it? Comes back up to the phase 3. Ernie, phase 3. Even bigger drop down. Look at the consolidation now. Stop run. Bigger stop run. Again, all these big wild swings. This one continues higher. All right. Here's another version of it. Ready? All-time high. Phase 1, phase 2. The dots are close to each other. Ernie, this one has a more pronounced run to the border. You see that huge drop? Comes all the way back up. There's our phase 4. Phase 4, Ernie takes out the stops by just a few ticks. Comes all the way back down and lower. The effect of this pattern signals time-wise to the other nudniks up and down, 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 up and down. Okay, here comes another one. Ready? Phase 1, all-time high. Phase 2, in the shadow of the all-time high. Little run to the border. These are pretty big down candles here, Ernie, compared to what was going on to the left, right? They're the biggest drops. Not too dramatic though, right? But look what happens when we get to the phase 3. Phase 3 takes us all the way back down. So there's a 1, 2, 3 combination going on here that I can see. Let's see if there's any more. We're only about halfway back to 2008. This is 2013. Let's see if I find another one. There's the other one. See how you're starting to see them with your eye now, the pattern? Okay. Phase 1, brand new high. Phase 2, consolidation, run to the border. There's that first drop, the pullback to the phase 4. Phase 4 takes us all the way down to a brand new low. Okay. 2013, and we're going back, and we're going back, and we're going back, and we're going back. I didn't call this one out, but I see it now. Do you see it? Phase 1. Check it out, Tim. Ready? Green dot goes up. Green dot goes up. Want to guess what's going to happen over here? Phase 2 goes up. Where's the first phase 2, Ernie, that it closes underneath? Right here. Where does it go? Down. Crushes the low even further. After the pullback. Back up. And then it goes down again. High, down, pullback, new low. Let's see if we can find any more of those suckers. There's one. You see it? Green dot, little consolidation phase, run to the border, pull back, phase 3, drop down, new low. Let's keep going. This is only 2010. Ooh, where have we seen this before? Phase 1, phase 2. Phase 2 is in the shadow of the all-time high. Run to the border, Tim. Pull back into a phase 3. Now, I want you to compare what we just found to a brand new chart. File, new chart. NQ. Daily. Okay. And here's where it really starts to become functional, right? Because these kinds of huge candles here are what we're seeing. These kinds of huge candles are what we're seeing. Here we go. Okay. So Ernie, Bo Bernie, check it out. The chart on the left is from 2010. Let's go. That goes back 1, 2, 3 phase 3s. 1, 2, 3 phase 3s. So we'll come here. See any similarities between the two? Yeah, of course you do. That's a rhetorical question. Okay, now here's what's really interesting. In the upper right hand corner, it's telling me today is a phase 3, which means there's a little tiny red dot that's going to form on the close of that bar. And Tim, the phase 3 over here was the bar that went below the moving average. Let me go through this with you slowly. Ready? Phase 1, phase 2, phase 3 is the puncture bar all the way down below the MA. Now look over here. Ready? Phase 1, phase 2. Now phase 3 here is today, but just the day before. Tim, can you see if it was just 12 hours this way? The whole thing's almost identical. So we're in the ballpark here, kiddos, right? So here's the thing. Where does it go from here? Let's take a look at this. I'm going to call this bar on the left A and this other down bar B. I'm going to call this bar on the right the first drop bar A, and then Ernie, the one that goes through all the other bars, B. See it? Okay. I'm going to call this, let's call this one 3, just for now. Let's call this one 3. Yeah, hold on. Okay, so 3 is the one that pierces the MA and comes back up. In this one, 3 involved a few steps. It came all the way back down. Check it out. So it came down, punctured, and then came back up to here. Okay, so all 3 of those things have already taken place on the right side, meaning it dropped down, it came all the way back up. So in this one, let's call this one candle X, candle Y, and candle Z. Over here, X, Y, and Z occur in 2 candles instead of 3. Would you agree with that statement? X, Y, and Z occur in that same cluster. Matter of fact, let's change the color of the cluster. We'll make it pink over here and pink over there. Okay, so Ernie, if that's the case, the next candle in the play, is this little bugger right here. You see that, guys? Here. Oh, Ernie, I'm just going, I'm showing you as I go what I think I see. Where are we in the sequence? So this bar here is where I think we're at right now. We'll use a different color. How about, yeah, pale turquoise. So that's here today. Okay, so we'll call that one 4, just to be consistent from chart to chart. Call this one 4 on the left. Okay, so candle 5 does what? Candle 5 takes us into the lows of the B candle. Candle 5 takes us into the lows of the B candle. Candle 5 closes above the low of the B candle. Okay, so over here, candle 5, which isn't here yet, closes above the low close of the B candle, which is 67.55. That's candle 5. Candle 6 is a phase 4. And that punctures even higher into the B candle. And let me see if I can see any other way of estimating that reversal point. Give me 1 second, please. Be patient with me. I'll find it. There's almost always a resonant angle in the pattern that drives us back down. It's not clean. It's got to be clean. It's got to be clean. Stand by. Okay, so what I'm seeing here is this high followed by that. Like this. And then a retracement to here. Let's see if there's any such monster over here. Okay, on the left, we have that high right here. Can you guys see that? It's very small. Right there. And then Tim, we have this. Right there. It's kind of close there. Let's see if we can duplicate the line though. We'll come from the high of the middle of this red triangle. And Ernie, I'm going to try to see what I can't figure out. That's pretty close for the high side. Let's see if it follows through on the bottom. Tim, can we make that argument, do you think? Again, I'm trying to get you close. I start to lose a little self-confidence when I get that far in. And so, what I want you to see is that. And if we change this, you can get it to look close. So there's a lot of similarities here, right? So candle 6 should if the play follows correctly, here's 5. Tomorrow is over here. That takes us, it looks like, a third of the way into the channel right here. Let's try to do a 33 and a 66. Yep. Okay. So over here then, we'll set this as default. Trend channel here, here, here. So there's a, if the patterns follow each other, we're coming up tomorrow just shy, what was that, 68.15? Oh no, candle 5, forgive me. Candle 5 goes to the bottom of the trend channel, which is 67.80-ish. Okay. And then candle number 6, which is the next one, over here, takes us up into that. Apply. Boom, 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 boom. Let's see if we can draw over. Opens here and comes down about there. Let's make this way thicker and blacker. Like that. Okay. 6, 6. And then 7. And again, these aren't going to be exact, because you can see how some of the candles are combined, but the flow, right? The flow and the direction and the turn points is what we're interested in. Candle number 7, it seems to potentially come, it's the start of another drop. Back down. Let's call that 7. And this one hit the MA first. Just shy of the MA, so that would put us, if 7 follows, somewhere back down in the 6,400 area. I know that the next phase 4 will be here one, 2, 3, 4, 5, 6, 7 more trading days. So somewhere between now and the 15th. Somewhere between now and the 15th. I'm expecting this drop to occur. Back down. So if you're watching this video, recreate these trend lines the way that I've drawn them here. You can see where I've picked the line, the upper and the lower. I'd like you to draw a 33 and a 66 channel separator inside of that, and I'd like for you to follow the lower and the middle third for resistance. Use them as targets on the way up, and as we come into the phase 4 between now and the 15th of next week, watch for retracements back down out of that area. Hang on, Tim. April, May. Yeah, I don't see any events, Tim, that correlate with a 2010 April event right here. January, February, March, April. So that's what I got. And if you look for those patterns, over the course of the last numbers of years, you'll see those same things happening. So does that look familiar here, guys? Now that you have that, if you have the software, it's real easy to see it. 1, 2, this would be the 6th candle. 6. Pull back into the trend channel. I think there was one more. Yep. This one actually made it all the way back up and tripped out the high again before it fell. So the point of this is that we're going up for a while, and then we're coming all the way back down to the lows of the drop. That's kind of what I wanted you guys to see. My a pattern that matches the one we saw the closest is the one that we just went over here, where it comes up, hits the line, and then drops down. So short term from the NQ, I'm looking for a rise somewhere between 6,600 and 6,800. If you have any questions about that, please feel free to comment.